digitization is far beyond extraction of information. And if you look at a decision-ready risk for a property underwriter, a third of the data comes from internal data, around a third comes from external data, and the remaining information comes from the submission. So you have to ultimately orchestrate those different data sources into a single view for the underwriter. If you only focus on one of those sources, you're not going to create value. So the reason we created the data ecosystem is to make it operationally incredibly easy for an insurer to start using data sources.
Good morning, good evening, and welcome. Matthew Grant here, and I'm back today with an old friend, prior podcast guest, and as you'll hear, someone leading a company I do have a rather special interest in. Now, we're delighted to have Cytora's support for many things, including our recent event in New York, and that, along with our live and digital events today, are proving that insurers are taking more and more interest in what is happening with technology and innovation. You can find out more about what we are doing across multiple areas, including all we've done with Cytora, on our website, www.instech.co. But for now, on with the show. Richard, it's great to be talking to you again. We've known each other a long time, but you've now moved to New York since we first caught up. How's that going?
Yeah, it's been an exciting time. I always think you move to a new city, you feel super energized because it's a new context. And for me, I think the aspiration was to fully move to New York. I've got halfway there because I'm still kind of coming back every week or so.
No, it's great to see what you've been expanding into the US, and we'll talk a bit more about that in a minute. So let's just quickly do an overview for Cytora. I've got a bit of a personal vested interest, I just should declare, and known you since 2016 as one of your early investors and early advisors. But the company itself was founded back in 2014. You're one of the co-founders. Today, you've got, I believe, close to 100 people, some in the UK, quite a few in Europe, some in the US. You raised over $40 million, including $25 million from EQT a few years ago. And today, you're supporting commercial insurers with the more efficient flow of information to aid decision-making. We've been on a couple of podcasts before, so we were back together in February 2020 for number 68, and then January 23 for episode 227. So your goal today is to beat yourself in terms of number of people listening to this. But also, we were delighted to have your support back in March this year, talking about New York, along with Google and Nigel Walsh, when we actually ran an event and had a really incredible turnout from insurers, which just shows, the power of being able to do these events on the ground, as we're going to be talking a little bit about. So quite a lot in there. Anything critical I've missed off before we kick off?
I was just remembering some of our early conversations way back in 2016 when you really helped us develop our view on insurance. So I remember those days very fondly. The initial vision we had back then is still true today, except we've kind of accelerated on a clear direction towards realizing it.
Yeah, so let's talk a bit about that. So 10 years on since you founded the company, I mean, the implementation of what you're doing has changed a little bit since you started. But how does the world look to you today versus what you saw back 2014?
There were many things back then that we would have said were kind of impossible or improbable, or at least hard to achieve, that today I think are eminently possible, very achievable. And that is why I'm hugely excited about what we're doing and the possibility that exists in commercial insurance today. If we've been able to say heterogeneous risk information could be understood, digitized, standardized, routed for decisioning, straight through processed in more homogeneous classes without any human intervention, enabling risks to flow at kind of zero marginal cost through the value chain. That possibility back in 2014, I think, was very much a faint possibility. Today, it's achievable and in some cases already achieved. So that's why I think I'm very, very bullish on the long-term potential of what we and other companies are doing in this space.
It's a big tension, that, isn't it, for founders, because you've got the vision, the market has to move with you, technology has to be there. A lot of companies fail, not because the vision is wrong, but just because they're too early.
Or the timing's wrong, or actually your vision is out of sync with the technological possibility, 100%.
And from the insurance point of view, say 10 years ago, the idea of transformation, embracing innovation, the sort of people were making decisions, CEOs, C-level, started to understand it, but probably didn't fully embrace it. Today, it seems that's changing. But along the way, transformation has been responsible for killing off quite a few companies. And I think probably quite a few people's careers have not progressed because they've maybe been involved with that. You mentioned it's changing, but more specifically, what are you seeing that's changing in your clients when you go and talk to them about what you're offering?
Previously, there used to be this very tight coupling between how risk moved and where judgment was applied. So an underwriter would receive a risk submission, and that person would be responsible for both moving the risk through different stages of decision making and at particular points making judgments on that risk. And the same is true on claims, where a claims handler would receive claims documentation. They would be responsible for moving it to the point of adjudication and judging the risk or the claim in that instance. And the movement is now happening in an AI native way. So the risk is moving autonomously and judgment is happening where required and where it adds value. And that's where companies are starting to see this path to a little marginal cost model or a zero marginal cost model where you can onboard a much higher volume of risk or much higher volume of claims without adding cost or adding headcount. That is a major change in mindset.
As you're talking there, I'm thinking about a sort of analogy from our personal lives, which is, for example, we now buy online. To your point about you've taken that process out, which before you would have needed to go to shops, now you might choose to go to shop, but you can make a decision much more quickly based on information you're getting digitally and removing that frictional effort to go out and buy things. It's a broad analogy, but that's kind of what you're talking about, isn't it? In terms of underwriters are spending more time actually doing what they get paid to do as a job.
100%, yeah. I mean, with underwriters, claims handlers, other risk professionals, these are highly skilled people that they are excellent at making decisions on risk and understanding, for example, how to fit the risk to the underwriting strategy, how to fit the right policy to the risk to run it in line with the company's strategy. And I think what is happening today is because these roles are focusing now predominantly or exclusively on judgment, on decisioning judgment, companies are able to scale judgment across a much higher volume of risks than they've been able to do before. And actually how risk flows, how it moves from the point a submission is collected to the point it's decisioned and quoted priced, that's happening in an AI native way where it doesn't require a person to collect something, enter data, rekey the data, rekey it. That's happening in an AI native way. And that to me is tremendously exciting because the big challenge with insurance is for people that work in it, it feels like a vast industry, but when you zoom out, 80% of economic losses are non-insured. So it's actually small relative to other industries and relative to global GDP.
So Richard, we're talking in London. You can hardly walk down the street in this part of the world without bumping into somebody from insurance. So what happens when you meet someone and you know who's a CEO or leader of an insurance company and they ask you what you're up to just now and why should they bring Cytora in to talk to them about their business?
The reason we exist as a company is we accelerate the transition from manual workflows that absorb a huge amount of underwriting capacity to digital risk flows where all of the underwriting time is spent on decision-ready, portfolio-enhancing and winnable risks. And our platform does that by digitizing the core workflows of new business onboarding, renewals, claims, etc. The big benefit is basically an uplift in GWP per person. Many of our customers have achieved over a 40% increase in GWP per FTE, and they've improved broker turnaround time by 10 times.
So for those that don't speak insurance, that's gross written premium per full-time employee, the FTE. So basically what you're saying there is because of the efficiency of your underwriter getting the information, they can actually look at more effectively risk coming in from the brokers, I guess it'd be mostly, and make a decision on it, whereas before they would
100%. Previously, 40 to 50% of the underwriter's time would be actually spent on reading through information, entering and rekeying the information. Today with Cytora, the underwriter receives what we call a decision-ready risk. So it has all of the data, all of the insight required to actually decision it. And then for the more homogeneous risks can be straight through processed so that they can actually be quoted and ultimately quotes can go back to the broker without needing a person to actually review the information. That's more in the SME, lower mid-market space.
Right, which of course what we certainly in the UK, what we're used to from a retail point of view, if we go and get a property quote or a motor quote, is effectively going to be underwritten and by an algorithm. You're saying in that sort of smaller space, or presumably does that work for renewals on the commercial as well?
Yeah, you can auto-renew, or in claims you can auto-adjudicate, where you can actually pay the claim without needing intervention. And the reason, almost like the context of why this matters, is insurers are not in control of the data they receive, and they exist in this many-to-many marketplace where there are many clients, there are many brokers, and there are many insurers. And that means inherently risk data is heterogeneous, and it is not standardized. And that's why you ultimately need technology to understand risk information, interpret it, digitize it, standardize it, turn it into a format that's unique to your view of risk, and then enable decisioning off the back of that. And that's really the challenge that we focused on and are solving.
Yeah, because it seems to be the go-to technology to share information is still email. It might be an attachment, it might even be embedded in the wording of the email for submissions or endorsements.
Yeah. And on that point, I'm a huge believer in actually acknowledging the reality of the industry in a sense. I often talk about the sociology of the insurance industry. It's a many-to-many marketplace. Risk information will always be, in my view, heterogeneous. I think it's way better for brokers to be able to submit risk information however they want to. I always think there'll be a broker specializing on, for example, golf courses who will have a small portfolio and they'll send handwritten information. I think that is a good thing. Ultimately, risk almost should be the interface for risk, should be more like Google, where you can spell something incorrectly and Google will still come back with the search results. So I think that's a better way for the industry to accept risk submissions.
Yeah, so you're one step ahead of Google because I don't think Google accepts handwritten queries yet.
Not yet. Yeah.
But that's a big part of what you have to do to be successful, isn't it? I mean, right at the very front end of the business, you have to be able to identify what's coming in, tidy it up, and then present it to either the underwriter or to some kind of analytic to decide what happens to it.
Definitely.
And how commoditized is that becoming now? Because people are building businesses purely on that data ingestion side. You're building that in as a necessary part of what you're doing. But how do you balance between what you build yourself versus what you buy in from other commoditized ways of reading handwritten submissions, for example?
Yeah, so we really focus on, we use all of the core foundation models, Google Palm, GPT-4, Claude, and many others. Yet we verticalize them deeply to the specifics of commercial and specialty insurance. And what we found is risk is peculiar and it's very, very different the way brokers provide risk information. As one example, every insurer will define their own questions that they want answers to. They'll have like 30, 40 questions or risk control questions. But most insurers will receive the majority of their risk submissions on their competitors' or peers' forms. So it isn't just purely a question of how do you extract the information, it's also a question of how do you understand subtle differences, how do you standardize, and how do you auto-match very different risk controls to each other. And we found that insurance is I think it's one of the deepest industries in the world, and that's why it requires a very vertical solution.
And for you personally, how do you not stay ahead, at least understand enough of what's going on? You've got Aeneas as your CTO, one of your co-founders. So from a technology point of view, you've got somebody that's grown with you in the business. But one of the challenges for people leading businesses, whether they're big insurance companies or early stage startups, is understanding enough about the technology to have an intuition as to what is possible, but probably not be able to spend the time doing the technology itself. How do you yourself learn enough to know what's possible without getting caught up in a deep learning sort of investment of time?
The learning for me has been focus on hiring a great team. You hire great people, trust them to make good decisions, empower them. And today we have, I think, an amazing team on the product and engineering side who I think their intuitions are often the right ones. They're counterintuitive. So they've made in the last 2 or 3 years really good decisions on basically how to build our platform. And we've got to a point where we've taken a path in our product platform strategy where we're on a path to what we call self-serve, where we can provide our platform to an insurer. And if they want to, they can configure it themselves. And that basically allows them to actually reinforce their own competitive distinctiveness. They can create their own IP on our platform. And that bet has been, I think, a tremendous one. And we're really seeing the fruits of that at this point in time in terms of our revenue growth and scale of customers.
And on that point about trusting the team, I mean, to me, having sort of observed the growth of insurtech and technology companies in general in insurance, one of the areas that really marks out those companies that have survived and then increasingly being successful is the ability to bring in people from the industry or found with people from the industry. You started, actually all of you were outside of the insurance industry, which is quite unusual these days, but you've been able to attract people into the business that can actually help you understand what is happening, what it was that attracted them to the business. You've got Juan de Castro, you're previously at Hiscox, in quite a senior role there. I mean, why would they come and work with a sort of still relatively early stage startup versus a mature insurance company?
Yeah, well, the reason I think people like Juan, Matt, and others have joined Cytora at different phases is they are animated by the vision and tremendously excited about inaugurating this new, better version of the insurance industry. And ultimately, you have to be convinced by the vision because startups are very hard. There's many challenges you have to overcome at different consecutive stages. So that's one thing. I mean, they have to be excited by the vision. I also think our culture is a very enjoyable culture to operate in. We give people a lot of autonomy and empowerment. We embrace difference. So we have similar operating principles, but we try and hire people who are very real people. They are substantive people. They do many different things in their lives. We hire them all over the world, so we have a very geographically and culturally diverse team. And we really, really index on delivery. So we focus on making customers successful. And we want our sponsors, when they move to another insurance company, to recommend us, say, look, Cytora were great. And one of the best things is when that happens, when you actually hear someone say, you should talk to this company because I had a great experience. And people like One have really brought that focus on action and delivery. And that's been a huge reason we've grown in the last 2 or 3 years in a really, really accelerated way.
Yeah, it's hard to fake insurance knowledge. I want to come back to this point about generative AI. So we're probably, what are we now, probably a year and a half since we started discovering generative AI as a sort of mass market through ChatGPT. And you mentioned in passing about allowing the tools to make a decision. Where are you seeing the most effective use of generative AI by insurers today that connects into how you're supporting them?
Yeah, so the first area, and I'm going to talk about mid-market in general. So we're talking about medium-sized risks in property would have tens, maybe hundreds of different property exposures, or liability financial lines. We're talking about meaningful risk, which might be multinational. So the complexity is of a certainly a meaningful level. And in middle market, the main benefit is really creating capacity. So an underwriter is able to ultimately quote and bind maybe 40 to 50% more risks in their day. And the reason they can do that is instead of actually spending 40 to 50% of their time reading and entering and rekeying information, they're receiving decision-ready risks that they can quote in 3 clicks. So that's what our platform does. It gives them back time. It gives them 40 to 50% more time. With that time, they can redeploy that to quote more risks, spend more time with brokers, spend more time on the phone, in person, talking to brokers about, okay, what do I need to do to win this risks? How can I see more risks within my target appetite? For example, Markel International, we published a case study recently. They increased their premium per person in their team by 113%. And they did that in the context of actually a reduction in underwriting authority. So over time, the team became slightly less senior in terms of underwriting experience. And they reduced their turnaround time from over a day to under 2 hours. So when I think about that, I think that is amazing. That is an exponential increase in productivity that you don't actually see in most industries. So the fact you can achieve that in insurance should give all of us great confidence of what's coming.
Yeah, and it's, as you said, it's easy to measure. It's not easy to get there, but once you achieve that, or you know what you want to achieve, you can't hide from that kind of efficiency play. And just building on this question about the generative AI, so for people, initial experience of generative AI, and probably many people today, they still think about what their experience might be with ChatGPT or Gemini from Google. You put a question in there and it goes out and it sources a lot of information. But what you're doing is slightly different. You're actually looking at a set of data that is proprietary to the insurer or insurer and their broker, querying that. So let's just want to dig into that a little bit more about, is this the first wave of where insurers are actually comfortable using generative AI? Because it's less about touching the customer. You don't have to worry so much about regulations because you're not making pricing decisions on this from a source of data that you can't necessarily completely verify. You're actually using it on the point is you're using it on data that is your data, but you're using the generative AI to be more effective in how you actually make those queries and pull out the information.
Exactly. The way we use generative AI is we enable each insurer to define their own, we call it target schema. So the 50 or 100 data fields that they want to capture so they can quote a marine risk or an aviation risk or a property risk. They define what those data fields are, and then our platform automatically starts capturing those different data fields from the submission information, from the internal data the insurer has, and all the external data sources. And it brings all of that data together automatically. So for example, it extracts the data from the broker submission documents, which tend to be very unstructured. There's lots of information in the body of the email. There's big loss runs, property schedules. It also takes the data from the internal data sources, which might be Excel spreadsheets about your broker licenses, or your existing customers that you have pre-existing exposure to, and external data sources where underwriters typically have done lots of manual lookups of. And I can talk more about the data ecosystem, how we're pre-integrating these different external data sources. So it compiles all of the risk information into a decision-ready risk interface where the underwriter can see the risk information automatically. The way we do that is we use large language models to ultimately kind of understand, extract, digitize, standardize all of the information. The underwriter can still see the provenance of where it's come from. So they can still click on an individual data field and say, okay, this came from page 3 of the supplemental application from the broker. They can decide to change the field. So it gives them a complete line of sight into provenance, and it's explainable. And we found that's a very effective way to obviously streamline the process, but also build trust and build real believability in the provenance of the data.
Yeah, I mean, my personal experience of that, a little bit of a tangent, but it's probably still relevant. Perplexity.ai, which a few people have recommended to me as a tool you can go on to ask questions, is very good about giving you the provenance, so you can see where it's got the information from, which is much harder to do. I don't think you can do actually with ChatGPT. Just come back to talk about that question or that point you made about third-party data. So you're not only building your own tools, you're actually starting to create the platform, the ecosystem to integrate with other people. So you've announced partnerships with TensorFlight, Moody's RMS, Hyper Exponential, who we had on stage with you in New York. So how do you think about that in terms of not just a benefit because you're connecting the data up, but also it sounds like you're actually going one step further and you're helping people to make intelligent decisions based on third-party data that you can surface up for them, but it ultimately is still somebody else's data.
Yeah, 100%. And when Cytora started, we were very focused on bringing together large amounts of external data to really supplement what the underwriter got. So I feel our vector onto this problem is probably quite differentiated because we've done a lot of learning in that space. And the way I would encapsulate it is digitization is far beyond extraction of information. And if you look at a decision-ready risk for a property underwriter, a third of the data comes from internal data, around a third comes from external data, and the remaining information comes from the submission. So you have to ultimately orchestrate those different data sources into a single view for the underwriter. If you only focus on one of those sources, you're not going to create value. So the reason we created the data ecosystem is to make it operationally incredibly easy for an insurer to start using data sources. And on day one of the deployment, we always talk with the underwriter, say, okay, what data sources are you using today? And they'll say, I'm using JBA for flood, and I'm using Moody's for company data. And we will either switch on those data sources when we have them and the insurer can use their own API key, or we'll integrate those data sources. Tom Coward, who's leading our partnerships, he's adding a new data partner every 2 weeks. So by the end of this year, we'll be around 60, we're around 30 today. In due course, it will 250, 500. So at some point, I hope all of the data sources will be available to any of our customers to use in their digital risk flows.
Well, watch out, Tom. I guess you might be getting a whole swath of people kind of like joining that queue to be your one every 2 weeks. So no, very, very impressive. I mean, and actually understanding what a few other much larger companies are doing in this space, I suspect they could learn quite a lot from you in terms of that urgency to be able to do it and not get too caught up in their own process. So yeah, it'd be great to come back and talk a bit more about.
I know you often talk about the value of ecosystems. I 100% agree. Where I think the openness, the insurance value chain has like 7 steps in it, from the client, the broker, the insurer, the reinsurance broker, etc. So unless companies are open in terms of integrating with others, like the transmission of risk will always be very, very frictional. So that's one of the big reasons we're trying to enable data providers to operationalize their data into risk processing workflows very easily.
And ultimately, everybody wins in that scenario. I mean, I just got to believe that it's the rising tide that raises all boats, and in a very sort of positive way. But talking about the underwriting journey, but you've now also started to move into claims. You announced a partnership with Chubb. That's always, I guess, a challenge when you're leading a business, is you do the balance again between building on what you're good at and what you want to focus on versus now you see an opportunity and you're growing into it. Knowing you, Rich, I'm sure it's a very intentional move to go into claims, but it'd be great to just talk a little bit about what motivated that and what you're doing.
Well, our vision in terms of what we do is really to streamline the core transactional workflows that commercial insurers have, and those are underwriting, so new business and renewals. There are adjustments, so midterm adjustments for endorsements when a customer wants to change their policy in some way. The third big area is claims. What we've learned in the last couple of years is claims is as heterogeneous and unstructured as underwriting, if not more so. So in a US insurer, 50% of their claims will come into physical mailing rooms. They'll receive documents from hospitals, police stations, law courts, and many others, sometimes thousands of different categories of different claims documents. And the claims transaction is very successive. So it doesn't happen all at one point in time, but the actual claim information comes successfully. So you might receive a police report, then you will receive a different type of report. And all of that information has to be collected, classified, extracted, digitized, and then turned into an adjudication-ready claim. So our platform, we realized, flex very easily into claims, and that was recognized by certain customers, and yeah, it's now a core part of our vision. we've had to make very, very little adjustments to our platform because we built it in a very low-code way that can flex easily across these different workflows.
As you've been growing what you've been doing, the whole area of augmented underwriting, algorithmic underwriting has been growing quite significantly. Key is the one that most people look at, but there are other organizations doing this in different ways. How does that all come together with what you're doing at Cytora? The whole driver behind algorithmic underwriting is that can be done algorithmically by implication, doesn't need somebody actually reviewing that. That presumably is quite a strong pull for you as an opportunity as you look forward.
Yeah, we obviously focus a lot on how you actually digitize risk up front and then streamline an end-to-end workflow. And if you do that, you might choose to say, well, instead of decisioning this risk or adjudicating this risk with a person, we're going to do this algorithmically. We're going to do it in an entirely automated way. And some insurers talk about straight-through processing, some talk about straight-through quoting, some talk about algorithmic underwriting. They're all the same thing in essence. That's not our focus. We really focus on actually how you digitize the end-to-end process. And as an example, one of the reasons our partnership with Hyper-Exponential is so exciting is Hyper-Exponential really enable the pricing around that. So Cytora collects the risk, digitizes the information, pushes it into Hyper-Exponential. And then off the back of that, the insurer very easily can automate that process. But I think ultimately, the more insurers can piece together these different technologies into something that is a target workflow or target operating model for them, that's going to create competitive difference. So we always have a best practice approach, but I would say we're never too opinionated about exactly how it has to work. I think sometimes each insurer will take it in a different direction.
And then on that insurer point, we talked before about AI, generative AI, decision making. How are you seeing your clients or the underwriters define or set judgment about how do people make decisions when they're getting a response back from the analytics? They've got their own intuition. Sometimes the analytics, there's uncertainty around it. It's not a binary yes, no, go, is it? When you're underwriting and you've got this data coming in.
It's a really important question about how does judgment interface with data, and based on, for example, subjectivity, where do you want judgment in the process? Based on complexity, where do you want judgment? Where do you not? And I think that decision of where to embellish a workflow with judgment versus take judgment out, it's a really, really important question. So as an example, in mid-market workflows, we often digitize the risk, it's decision ready. Sometimes you might want the underwriter to change 3 things, sometimes maybe 5 things, sometimes 10 things. And that's really up to the underwriting team to figure that out. And obviously there's a trade-off because the more judgment that you put into that process, the more dissonance you'll get. You'll get different perspectives on what business activity is. If you put 10 underwriters in the room and said, what activity is this business doing? They would come up with different answers. So using large language models to do that, you're going to get more consistency. But at the same time, there's obviously so much experience and expertise in the heads of underwriters. So you would need to be intentional where you do that and where do you not do that. And it depends, I think, a lot on the complexity of the risk, how homogeneous it is, how similar these risks are, how many have you seen before. And then you can be very, very intentional about where you put judgment into the process.
So Richard, you touched on how companies think about the return on investment. You started work at Allianz a couple of years ago. Big global organization, really quite hard to get to these types of companies from many companies that, like yourselves, that are still relatively early stages. What was it about what you were doing that attracted Allianz and managed to get them to work with you at Cytora?
I think the amazing thing about Allianz is they have a very, very clear and powerful vision of the future. And you would have seen recently they've actually unified their mid-corp business with their large corp business under the banner of Allianz Commercial. And when Chris Townsend joined Allianz as the board member responsible for commercial insurance, he talked in a very clear and, to me, exciting way about the idea of a flow business where risk of flow to underwriters decision ready. And it actually just gelled and unified very tightly with how we were thinking about the world. So I think above everything, there was this unified vision. And we've then just worked to actually deploy that across Allianz. So we started with a set of operating entities. We've since expanded the number of countries. We then expanded into not just the mid-corp, also the large corp. And it's been a brilliant relationship. We've learned so much. And the benefits are now really, really materializing for Allianz. So as some examples, in certain operating entities, They've increased the gross written premium per person by over 40%. They've reduced their quote turnaround time from over 3 days to under a couple of hours. They're now unifying their business in a very coherent way. So they're able to, for example, understand exposure across geographies and across different levels of the market, from SME through to mid-corp through to large commercial. But I also think we're just getting started. There's a huge journey ahead, but it's been an incredibly energizing and foundational partnership for us.
And what are lessons from that or other companies when you go out and talk to them? Because the reality is it's not just one person making a decision. How do you work with different people in an organization, and who typically do you find is most receptive to what you're offering?
Our learning here has just been, you need to find an exec sponsor, ultimately who's going to provide the budget for your platform, who really, really cares strategically about what you're doing. And it has to be a big part of the company's strategy, obviously. So it has to be a top 3 pain point for that company, top 3 strategic objective. But beyond that, you then need many champions. People can help you navigate the organization. They can help you solve problems. And they're really your counterparts. They're your partners that you should be picking up the phone saying, hey, we've got a problem here, or I'm not sure what to do here. And then beyond those 2 groups, the companies such as Cytora and the insurer such as Allianz, there's got to be cultural affinity. You've got to actually gel really well as 2 companies. I think when that happens, really great things are produced. So I think a lot of that has to happen in person. So you need people on site. You need to be building very deep relationships. And then going back to the point about volatility, sometimes things are not going to work as you expected. So you have to ultimately have a very much a pragmatic attitude to solve them, fix them, improve them, and move forward. And I think you need a real honesty to do that as organizations. We are, as a company today, we are very, very delivery focused. So we obsess about delivery and delivery quality. And that's probably the reason I think we've had real success with our deployments, because we're more interested in the delivery than the idea. And that's, you really need that cultural mentality.
It's not a great tagline, more interested in delivery than the idea. So Richard, it's been fascinating just to follow what's been going on with Cytora, and also, frankly, see you personally. Big growth journey for you. Hard to justify this in a couple of minutes, but what are 1 or 2 of the key takeaways for you, or maybe recommendations for other people to build and survive as a CEO and founder?
I think one aspect I feel very strongly about is to be very reflexive, or be in a learning mode. So when you start any company, you're going to have points of view, assumptions which are wrong, and you need to update your perspective continuously. And also you need to be very open to hearing from your customers and your team and everyone else around really how to course correct your vision into something which really meshes with reality. And that's been a huge learning for me. And I always say to people who join Cytora, maybe you'll give us the next inflection on our vision. Maybe it will be you. And we want to build a generational company. So it won't be the people always at the beginning who had the best ideas. It could be the person who joined yesterday. And so I've always felt building that muscle to be able to update, be reflexive, that's vitally important. If you hold on to the wrong idea for too long, you're always going to be dead.
I've always been very impressed with you. You've always had a very upbeat attitude. You haven't had a few setbacks, but I mean, as a business, you have had setbacks, and for some people might have just gone, well, actually, that's pretty tough. I'm just going to walk away from that. But for you personally, what is it that makes you keep going when in the past things have been really difficult? And as I said, you could have gone off and got a job somewhere else and had less hassle, I'm sure.
One of my heroes who I never met, but I read his books, is someone called Charlie Munger, who was the vice chairman of Berkshire Hathaway. He died a few months ago, which was really sad. And he said something that really stayed with me, which is like, if you as an investor don't have a stomach, so when the stock price goes to 0, you can't tolerate that, or you can't accept that, don't be an investor. And I've said, if you want to be an entrepreneur or an early part of a startup, if you can't accept when something doesn't work, or you have to change your product, or you have to go backwards 2 steps or 3 steps, you should work for a larger company. And for me, I try to really enjoy and ultimately love volatility, because I think when you lean into it, great things happen. And with Cytora, that's been a tenet of how we try to operate.
Yeah, it's a great sort of recommendation for founders, and love the volatility. And Charlie Munger did all right. I mean, he was in his late 90s when he died. He worked by choice, so he didn't have to, given how successful Berkshire Hathaway had been. Yeah,
and a part of it, I think, is not being too rigid or ossified or regimented in what your thinking is, because you're ultimately always having to mesh your ideas as a company with the world, and the world is always changing, and it's changing more rapidly than most of us believe. And so you need to update what you're doing a lot. And I think whenever something is too clenched or too rigid, it's going to be dormant, and then it's going to ultimately be extinct. So you have to do that. I think a great example of this, a company that has really borne the fruits of that approach, is NVIDIA, who has been a huge outperformer in the last kind of couple of years. And you look at how they've done that, is because they've continuously updated their vision as the facts have changed.
Yeah, and actually, I don't want to get into a whole generative AI stock market discussion, but NVIDIA is interesting because they were the people that built the chips for gaming. I remember 15, 20 years ago, we were looking at cloud, and NVIDIA was already one of the companies people were looking at. And I think I'm right in saying they've had sort of 70% profits in the last year, really taken off on the back of generative AI. But that's not like they came from nowhere. They've been there for a while. Anyway, so, and looking ahead, Richard, just as we sort of wrap up, what should we be looking out for in 2024 from Cytora?
We think about our growth across a few different axes. I think one obviously is the geographic one, so how we're globalizing. A big part of our success is now moving beyond Europe into the US and Asia, where we have a growing number of customers and live deployments. The other one is our product. So the main focus there is making the platform more and more self-service. So insurance companies can configure the platform in many different ways and explore many use cases even beyond what we know today. We really want to make it easy, usable, and very simple to configure the platform to new areas of insurance companies so they can move from analog to digital. The third area, which I'm really excited about, is beyond insurance companies. Both brokers and reinsurers we're now starting to address in more meaningful ways. And we have a very exciting deployment right now with a broker who's using our platform to digitize how they ultimately place risks. I think we'll also acquire customers in the reinsurance space as well. So we're looking forward to the development of that over the next year.
Fantastic. And also, of course, as we mentioned at various times, the expansion into the US and as a whole different and exciting market with the growth out there. Well, Richard, it's been great to catch up. Yeah, many thanks for that. And I look forward to, obviously, we keep quite close together, so tracking what you're doing in the year ahead, and on to the next podcast to talk about what you've been doing in 12 months' time or so.
It's been great. It's really nice to share like a moment in time with someone who knows where we've come from. And even though I was excited, I think back then when we first, I'm as excited now about what's coming. So I didn't always know why that's the case, but I guess just the context we're all in at this point in time is very stimulating.
Well, there's a lot going on at Cytora these days, and in particular that aspiration to build a network of hundreds of data sources connecting into Cytora to help insurers get access to a wide variety of third-party data is exactly what we've been supporting, and something where everyone wins. Well, you can find out more about what we're doing at InsTech on that topic and a lot more on www.instech.co, or contact me, Matthew Grant, through LinkedIn, or any one of us, hello@instech.co. That's it. We're done.